Everyone is chasing Texas and Florida. But while the crowd fights over overpriced condos and saturated markets, the real wealth is shifting, quietly, to 5 overlooked Midwest hubs. Most investors are looking at yesterday's data. We're looking at the 2026 migration playbook. We've spent months analyzing job growth, tax incentives, and affordability indices using tools like PropStream and DealCheck. We aren't guessing. We're tracking where the high-earning remote workforce is actually moving, not where the brochures tell you to go. In this video, we're revealing the 5 undervalued cities poised for a massive population boom by 2026. You'll get the exact data points for each city, the target neighborhoods for maximum ROI, and the specific strategy to secure passive income before the institutional firms move in and drive up the prices. If you want to diversify your portfolio while the entry price is still low, this is your roadmap. Most investors are making a classic mistake. They're chasing the noise. Texas, Florida, Arizona. On paper, they look like gold mines, but look closer. The entry prices, sky high. The competition, brutal. You're fighting institutional buyers with bottomless pockets, and the cap rates, they've been crushed. When you overpay for a hot market, you aren't really investing. You're gambling. You're hoping someone else overpays you even more later. That's the herd mentality trap. While you're fighting for a meager 3% return in a saturated city, the real wealth is moving in silence. Remote work changed the game. High earners are fleeing the coasts. They aren't all heading to Miami. Many are searching for something the coasts can't offer: affordability, stability, and actual room to grow. But here is the danger. By 2026, these hidden hubs won't be hidden anymore. Once the big REITs move in and the headlines hit, the window slams shut. The question is, are you going to keep chasing the tail end of an old trend, or are you going to get ahead of the next migration wave? So why the Midwest? While the masses are fighting over overpriced condos in Austin or Miami, the smart money is moving toward the new gold belt. We're seeing a perfect storm. A massive corporate migration, the rebirth of domestic manufacturing, and a remote workforce craving a lower cost of living. To find these gems, we aren't guessing. We're looking at job growth data, net migration patterns, and price-to-rent ratios. If you want to find these off-market deals before the institutional buyers swoop in, tools like PropStream are non-negotiable. Let's dive into the 5 hubs poised to explode by 2026. First up, Columbus, Ohio. This isn't just a college town anymore. With the massive Intel chip plant investment, Columbus is becoming a global semiconductor hub. We're talking billions of dollars in infrastructure. That means thousands of high-paying engineers moving in who need premium rentals. If you're looking for high-growth appreciation, this is your primary target. Next, we move to Indianapolis, Indiana. Indy is the logistics capital of the Midwest. Its central location makes it a magnet for distribution centers and healthcare giants. The barrier to entry is still remarkably low compared to the coasts, but the rental demand is skyrocketing. This is where you build your cash flow engine. Third is Kansas City, Missouri. KC is the ultimate, undervalued play. It's seeing a surge in tech startups and a revitalization of its urban core. The price-to-rent ratio here is some of the best in the country. Before you buy, run your numbers through DealCheck to ensure your ROI is locked in. Don't guess on your margins. Fourth, Grand Rapids, Michigan. This is a stability play. Driven by a powerhouse healthcare sector and a diversifying manufacturing base, Grand Rapids offers a hedge against market volatility. It's a slow and steady market that consistently outperforms national averages. Finally, we have Des Moines, Iowa. This is the safe haven. As a global insurance hub, Des Moines has an incredibly stable professional class. You won't see the wild swings of a speculative market here, but you will see consistent, reliable passive income. Now here's the reality. You don't need to fly to 5 different states to capitalize on this. If you prefer a completely hands-off approach, REITs through platforms like Fundrise allow you to diversify into these types of markets without managing a single toilet or tenant. Whether you're buying physical doors or investing digitally, the window to buy undervalued is closing fast. Now, knowing these cities is one thing. Finding the actual deals is where most investors fail. That's why I use PropStream. It lets you pull lists of off-market properties in seconds. But a lead is useless without the math. I run every single property through DealCheck. It eliminates the guesswork and replaces broken Excel sheets with precise ROI projections. Now, if you want exposure to these markets without the headache of being a landlord, there's a third option. Fundrise lets you invest in institutional-grade real estate with a fraction of the capital. True passive income. Stop guessing and start using the tools the pros use. Check the links in the description to get started with PropStream, DealCheck, and Fundrise today. Build your portfolio before the 2026 boom hits.